Hey everybody, Brian Hoops here with Midwest Market Solutions, our Market Insider TV closing segment. It's Crop Report Day, Tuesday the 11th. So looking at some charts here, and we may look at a couple charts, but we're going to look at the supply and demand report that was released today, go through some of the numbers as a little mini webinar here over today's activity. Now, normally we do a separate webinar when we have a big market moving report, but this one, there isn't that much really to talk about, so we'll just include it as part of our Market Insider TV segment. Let's look first here at ending stocks, and you can see not much change here. The corn number was larger than trade estimates, larger than a month ago. It's still down below last year's levels, and this was a little bearish to corn, which was lower right after the report's release and ended just mixed. Soybeans a little bit bearish as well, 955 million bushels of stocks, right in line with last month, well above last year's levels. That's the thing to keep in mind. A little bit larger than the average trade guess. So neutral to a little bearish for soybeans and bearish for wheat. Larger than last month. It is down from last year's levels, above average trade guess. So all these numbers that we saw as far as U.S. stocks, larger than trade had expected. World stocks, same situation here. Corn stocks above the average trade guess above last month. Soybean stocks larger than the average trade guess and last month. And both in the soybeans above last year, while corn's still well below it, but this is a bearish number overall compared to what we were expecting 2 months ago. And wheat stocks, 268, larger than the trade guess, larger than a month ago, and just down a little bit from year ago levels. Now, if we look at the world production numbers, the big numbers that we focus on this time of year is Brazil's corn and soybean production. They're very early in their season, yet we haven't even had the first harvest of corn yet, but these numbers are starting to slowly increase. You look at Brazil here, soybean crop, this would be a record, 122 million metric tons, well above last year's numbers, above last month, even above the average trade guess, so there's nothing bullish here. Corn number, this is a key. Look at the corn numbers for Argentina and Brazil, 94.5 million metric tons, 42.5. Now compare these to last year. We had a drought in parts of corn growing areas last year. Production was down. Market is responding by putting in bigger acreage numbers and larger production. So if we have this normal growing season, we're going to have significantly more soybeans than last year, more corn in Argentina, and more corn in Brazil. What this adds up to? Less export business for U.S. once we get into the spring time frame. We're going to have Ukraine and South American corn production to compete with us, and our export profile, while above last year's levels, is going to dramatically slow down. As last year, about March, when we had this drought, that's when our export profile really sped up. But that's why I think the USDA export forecast we'll look at here in a second is just too optimistic for corn. Right now, they're at 2.450 billion bushels. That is similar to what we ended up with last year, and that was with this big drought in South America. So if you're going to have that big of a crop in South America, plus Ukraine crop, there's no way we're going to have exports better than a year ago level. That's my opinion. Unless we have that drought help happen in March, April, May, our export profile is really going to fall out of bed. No changes, of course, to yield. They weren't going to do anything here this month. Ethanol down 50 million bushels. That's a little bit negative. This is our biggest, really one of our biggest components to this total usage. Much more than exports. Out of the 15, we're over a third of it is food and industrial usage. So yeah, we don't really want to use up any more of this export profile, but right now we did, and our ending stocks did increase by about 45 million bushels. For soybeans, no changes whatsoever to these balance sheets. I don't know why the trade had expected we'd see a small reduction in ending stocks. I thought we, if anything, they were going to increase this export profile, 1.9 billion bushels. We have to, on a weekly basis, we have to have exports exceeding our best weeks ever in history, new all-time record, if we're going to reach this 1.9. I don't see that happening, and I think this is too optimistic. These stocks are probably overvalued yet. They're underappreciated. We're going to be over 1 billion bushels based off of exports unless we get something out of China. And it's finally in the wheat here, a little bearish numbers. Exports lowered by 25 million, certainly justified as our profile is slow, probably going to get slower. Our stocks are growing. I could see 1 billion bushels of wheat stocks by the time we get into March timeframe as the USDA makes further revisions. All right. Let's instead of ending it, let's look at some charts here. This is Kansas City wheat. We had a bearish outside day lower reversal. Remember, we had a bullish one here, and that kind of started some short covering. And we had some positive technical action as we made a higher low and higher highs here. But this bearish reversal, a little negative, probably going to see some follow through as a result. In the Chicago contract, really not as bearish because we didn't make new highs, but a new low in here for last couple days. And soybeans, I thought was an interesting pattern. Excuse me, I hit the wrong one. Pull up oats now. We got soybeans. We got the outside day higher, but we're just in this trading range in here. You could put a a real narrow box on this thing. Just like that. Look at that sideways pattern. And this high bar here, this was news about China. We're having positive agreements, but we don't have any export business. This market's one day up, one day down. So we had inside day yesterday, outside day higher today. I don't think it means anything technically. It doesn't mean we're going higher. Doesn't mean we're going lower. I think we go sideways until we get some export business out of China. And that could be maybe not until January, according to some of the leading industry participants, including our Secretary of Ag. Same thing here in the corn. We could draw this same box, whatever you want to call it, sideways pattern here in this corn market. We're just going nowhere in this market. Certainly if we close below this area, probably going to see the market pull back and maybe back into the support area, but seasonals are a little bit higher here. Farmer selling is going to be slow. Basis levels should narrow up a little bit. If we get some news out of China, I do think we got a good shot to rally up into this resistance up in here against this March contract, about 6-cent gains, where we expect to see quite a bit of farmer selling. All right, that's going to do it for us for tonight. Hope this helps you out. Have a great night, everyone, and we'll talk to you again soon. I'll be back in the morning with our daily newsletter. Brian Hoops for Midwest More.